Imagine for a moment you're tasked with designing a brand new, highly complex aircraft, maybe something lighter, stronger, more fuel efficient than anything before it.
Hmm.
Or perhaps your focus is, well, more intricate. Developing a life-saving new drug, say, taking it all the way from the earliest lab research through clinical trials and manufacturing.
Huge undertaking.
Right. Or maybe even something like a cutting-edge fashion line. How does that get from a sketch to thousands of stores globally? Efficiently, sustainably.
Different worlds, but similar challenges and complexity.
Exactly. What's the common thread? The often invisible thread that brings these vastly different things from concept to reality. It's often this foundational layer of software.
Yeah, software that orchestrates the whole thing.
Today, we're embarking on a deep dive into Dassault Systèmes SE, ticker DSY.PA, a truly pivotal company operating right at that powerful intersection of imagination and, well, execution. They are a premier global provider of Product Lifecycle Management, PLM, for short 3D design and simulation software. In many ways, they're kind of the invisible architect of our modern world.
What's fascinating here is just how deeply embedded their tech is. In industries that define our daily lives, I mean, even if their name isn't, a household name.
Right.
Dassault Systems sees itself as a catalyst for human progress. Their mission, providing virtual universes to imagine sustainable innovations.
Virtual universes. Sounds ambitious.
It is. And our mission today is to explore how they actually do that. How do they build these complex virtual worlds? We'll look at how they built such a deeply entrenched market position, understand their big strategic moves like this new 3D UNIV plus RSES vision, generative AI integration.
Yeah, the AI piece is huge now.
Absolutely.
Yeah.
And we'll assess what makes them a leader in an industry that's literally shaping how everything around us is made. You might not know the name Dassault Systems, but trust me, you've definitely experienced the impact of their technology countless times.
Absolutely. So to guide us through this pretty intricate landscape, we've gathered some really in-depth analysis. We're covering everything from its, well, surprising historical roots, its huge portfolio of products,
Car stuff.
to its financials, the competitive scene, and yeah, those incredibly ambitious future plans. We're going to try and extract the most important nuggets, give you a shortcut to understanding this critical player, maybe spark a few aha moments.
Sounds good. Let's dive in.
Okay, so let's go back to the beginning. Every big company has an origin story, right? Something that shapes its DNA. And Dassault Systems is no different. It wasn't born in a, Silicon Valley garage.
No, not at all. Its start was much more specialized. It came out of the very specific, incredibly demanding needs of a French aerospace giant.
Salt Aviation.
Precisely. To understand Dassault Systems today, you have to go back to 1981. It was founded as a subsidiary of Dassault Aviation. Now think about what that entails. Designing complex aircraft, fighter jets, airliners.
Yeah, not exactly simple stuff.
Not even close. It requires extreme precision everywhere, intricate simulation to predict performance under, frankly, brutal conditions. And you desperately need to minimize physical prototypes.
Because building a real plane is, well, insanely expensive.
Astronomically expensive, incredibly time-consuming, and carries immense risk if there's a design flaw. So that heritage in what you might call mission-critical, high-consequence engineering that really shaped the company from day one. It built this culture of robustness, reliability, precision into their software, and that still defines them 4 decades on.
So it's not just about drawing pretty pictures, like you said. It's about creating digital twins, these incredibly accurate, functional, virtual versions of really complex physical things.
Exactly. That concept was foundational right from the start, this early, intense focus on demanding industries like aerospace and defense. It created software that just couldn't afford to fail.
No room for error.
None. Their tools had to be incredibly robust, reliable, precise. This wasn't software you just try out. It quickly became the absolute backbone of a company's design and manufacturing. And that legacy let them grow. Today, over 350,000 customers globally, huge enterprises down to SMBs, all relying on their precision.
Okay, given that vast reach, that complexity, How do they organize this empire of 3D virtual universes? Seems like a lot to manage under one roof.
They've actually structured it quite smartly, segmented into 3 broad pillars or sectors. Each one is tailored to specific industries, specific customers, allows them to specialize deeply, but still leverage their core strengths in 3D and simulation.
And the first pillar, industrial innovation, that's clearly their bedrock, isn't it? Where all that original expertise was forged.
It absolutely is. This pillar alone was, 54% of their software revenue in FY24? Huge. This is where their leadership in complex manufacturing was built, and it's home to many of their most famous, most powerful brands.
Like Tasha.
Like CATIA, exactly. Computer-aided three-dimensional interactive application. It's really their cornerstone product here. World-leading for high-end product design, especially things with complex surfaces, intricate assemblies. Think about designing a new car body, the smooth curves.
Or a jet engine's internals.
Precisely. Or even complex architecture. CATIA is likely involved.
And beyond just designing it, they handle the testing too. But virtually, before anything gets built physically, that must save just incredible amounts of time and money.
Immense savings. That's exactly where Simulia comes in. It's their virtual testing powerhouse. Engineers use it to run advanced, realistic simulations, check performance, reliability, safety, durability, under all sorts of conditions.
Before building a prototype?
Exactly. Before building anything. Saves huge time, resources, prevents costly errors, speeds up the whole development cycle. Then there's Delmia. That focuses on digital manufacturing.
The factory floor.
Right. Planning, simulating, optimizing global production processes, supply chains, basically making the factory smarter, more efficient, more agile by simulating it all virtually first. And finally, Enovia. That's their collaborative PLM platform.
Product Lifecycle Management.
Correct. This manages the entire product lifecycle: concept, engineering, manufacturing, service, end of life. It's the central hub for all product data, the digital thread weaving through everything.
Okay, so this segment clearly targets the giants: transportation and mobility, aerospace and defense, industrial equipment. Industries where these tools aren't just useful, they're, as the analysis says, deeply embedded in core engineering and manufacturing workflows.
Absolutely mission critical. They couldn't operate at that level of complexity without them.
Now, here's where it gets really interesting for me, the second pillar: life sciences and healthcare. This feels like a big strategic pivot, a major expansion beyond their traditional industrial roots. What's the story there?
It is a major strategic expansion, no question. It represented 21% of software revenue in FY24, and they call it out as a key strategic growth area. And their commitment, undeniable. Remember, their largest acquisition ever, 2019, $5.8 billion.
Metadata solutions.
That's the one. A truly bold move into a sector, pretty far removed from aircraft engines. Metadata is a leading cloud platform specifically for managing complex clinical trials.
So, drug development.
Everything from data capture, patient monitoring, trial analytics, regulatory submissions, digitizing a process that was historically paper-heavy, complex, frankly error-prone. And they also have BioVia. That handles the scientific informatics side, early-stage research, lab management, modeling complex biological chemical systems, molecular-level stuff.
So the big idea is to connect the lab to the fab. I like that phrase, creating this continuous digital thread, right? From early research through clinical trials, manufacturing, supply chain, for new drugs, medical devices.
Exactly. Digitalizing the entire process. Imagine the implications for speeding up innovation and improving patient outcomes.
Mind-boggling. Applying that aerospace rigor to, say, how a drug interacts with the body.
Precisely. Modeling, simulation, data management applied to a vital new domain.
And then the third pillar, mainstream innovation, 25% of software revenue in FY24. This seems to be about accessibility, bringing these powerful tools to a broader market. SMBs, maybe?
That's spot on. This pillar is anchored by 2 key brands designed for wider use. Many listeners might have actually heard of or even used SolidWorks.
Yeah, SolidWorks is huge.
One of the most widely used 3D CAD apps globally, famous for being, relatively easy to use, intuitive, massive user community, a real workhorse for designers, engineers, educators.
And the other one?
They also acquired Centric PLM via Centric Software. That's a specialized PLM solution tailored for the fast-paced needs of consumer goods, retail, fashion.
Different requirements there, faster cycles?
Exactly. They still need robust design and lifecycle management, but maybe with different scaling, different speeds, different ease-of-use needs than, building a nuclear reactor.
So this really shows strategic diversification, reaching out to high-tech, home and lifestyle, consumer goods, democratizing access in a way.
Absolutely. It shows they can adapt their core tech, proves it's foundational across almost all modern manufacturing and design, regardless of scale or industry.
Okay, so we have these distinct brands, these pillars, but the glue holding it all together, the central pillar of their whole strategy, is the 3D experience platform. What exactly is that? Why is it so crucial?
It's crucial because it's not just another product. It's more like a unified business and technology framework. Strategic Nexus. Think of it as the overarching operating system for innovation.
Okay.
A single digital environment where all parts of product development can happen collaboratively. It integrates their huge portfolio, all those design, analysis, simulation, data intelligence tools we just talked about.
Katia, Similia.
Right, all into one collaborative, cloud-enabled environment. Its fundamental purpose, to be the single source of truth for all product-related information, ensuring digital continuity consistency across the whole value chain. Concept to manufacturing to service. End of life.
Eliminating silos, promoting collaboration.
Exactly. Making sure everyone's working from the same latest digital blueprint.
So it's kind of the ultimate operating system for innovation then, orchestrating the whole product journey.
Precisely. And it's strategically vital. It drives organic growth, facilitates cloud migration, lets them offer higher value integrated subscription packages, and maybe most importantly, creates a formidable competitive moat. The growth figures show it's working. 3D Experience software revenue up 20% in Q2 2025, 22% in Q4 2024.
Strong numbers.
Shows robust customer adoption. This integrated platform strategy is really resonating, deepening their engagement.
Now, like a lot of software companies, Dassault Systems has been going through a major transition, shifting from selling perpetual licenses, buy it once, to a subscription model. Why is that move so significant? What does it mean?
It has a profound and overwhelmingly positive impact on their financials. Historically, yeah, you paid a big upfront fee for a perpetual license. Use that version forever, plus a smaller annual fee for maintenance.
Right.
Now they're aggressively moving to subscriptions. Pay recurring fees monthly, annually for access to the latest software, updates, support, often cloud services. This makes their revenue incredibly predictable and visible.
Smooths out the lumpiness from big deals.
Exactly. But more importantly, it significantly increases the total lifetime value of a customer. That revenue stream is continuous. It often expands as customers add more features, more users.
And crucially, it lowers the initial cost barrier too, doesn't it? Especially for those SMBs we mentioned. Makes these powerful tools more accessible without a massive upfront hit.
Absolutely. It democratizes access. Key part of that mainstream innovation strategy.
Yeah.
And the success, unequivocal. Look at the numbers. Recurring revenue subscriptions plus maintenance was 80% of total software revenue in FY24.
80%.
And it rose even higher, 86% in Q1 2025.
Yeah.
That just underscores the resilience, the stability of their model, makes them less susceptible to economic swings, provides a strong, predictable financial backbone.
Okay, you mentioned a formidable competitive moat earlier. That's a powerful phrase. What exactly gives Dassault Systems such a strong, durable advantage in this really complex, high-stakes market?
It primarily boils down to exceptionally high customer switching costs. Their software isn't just, another IT expense, not easily interchangeable like, say, email software.
Yeah.
It's a mission-critical system of record. Deeply embedded in a client's core engineering, research, manufacturing processes. These systems hold the IP, the designs, the simulation data, the operational blueprints for a company's most valuable assets, often representing billions in R&D, decades of knowledge.
So if you're a huge car company or an aerospace giant like Boeing, you've got decades of complex designs, simulation data, manufacturing plans stored in Katia or Anovia, moving all that, it would be catastrophic, wouldn't it? Sounds almost impossible.
Precisely. Prohibitively expensive, incredibly time-consuming, fraught with immense operational risk. Imagine trying to convert a complex Katia assembly, tens of thousands of parts, intricate geometries, material properties, to another format.
It's not just save as.
Not even close. It's like trying to translate a highly technical manual using Google Translate. You risk losing critical nuance, introducing fatal errors, potentially jeopardizing a multi-billion-dollar project. Data corruption, loss of IP, retraining thousands of engineers who've built careers on these tools. It creates this incredibly powerful lock-in, leads to very high customer retention, a remarkably stable, almost guaranteed revenue base. And connecting this back, the 3D Experience platform amplifies this moat. By integrating more solutions into one environment, they increase their stickiness. It's not just switching one product anymore. It's ripping out and replacing an entire interconnected workflow and data ecosystem. Exponentially harder, riskier, more expensive.
And we even see this playing out with huge names. That strategic partnership with Volkswagen Group, deploying 3D experience across multiple brands, actually displacing competitors, that really underscores the power of this lock-in.
Yeah.
These aren't small decisions for VW.
Absolutely not. These are multi-year, multi-billion-dollar commitments. They show the depth, the durability of this advantage. Once a company invests so much, it becomes strategic infrastructure.
Okay, so this isn't a free-for-all market. It's often called an oligopoly, right? Dominated by a few giants. How big is this global market Dassault plays in, and who are the other big players?
You're right, it's definitely the main of established giants, the global CAD/CAM PLM software market. It's large, well-established, but still growing robustly. Market size estimates vary a bit depending on how you define it, but generally range from, say, $16.6 billion up to maybe $28 billion in 2024.
That's a big range, but still huge.
It is. But what's more consistent, more encouraging, is the growth trajectory. Projections consistently show a strong KGR compound annual growth rate of 7.7% to 8.3% through 2030-2033. That's a powerful secular tailwind. A long-term underlying growth trend driving the whole market.
That's really healthy growth for such an established industry. Signals a lot of continued investment, innovation still ahead.
It truly is. And within this big market, Dassault Systems is the overall leader. 2024 data shows them with about 16.5% market share in the broad PLM and engineering software space. Their main strength, as we said, is high-end complex design simulation, especially in those heritage industries.
Aerospace, automotive.
Exactly. And customer surveys consistently rank their product quality as #1 against direct competitors, a testament to that foundational rigor.
So who are these other formidable players they're up against?
Their most direct, arguably most formidable competitor is Siemens Digital Industries Software. Siemens has a unique position. They combine deep industrial automation hardware expertise with a very comprehensive software portfolio. Their Teamcenter PLM competes directly with Innovia. Their Siemens Accelerator platform mirrors the 3D experience strategy.
A real head-to-head competitor.
Very much so. And Siemens Digital Industries reported impressive 26% comparable software revenue growth in fiscal 2024. So there's significant aggressive force. Then there's Autodesk, Inc., US-based giant, dominant in architecture, engineering, construction AEC with AutoCAD, Revit. Strong in media and entertainment, too.
Different core markets, mostly.
Mostly, yes.
Yeah.
But their Fusion 360 platform is a growing threat in mainstream manufacturing and product design. And like Dassault, they're pushing hard on subscriptions and cloud. And finally, PTC Inc., another major U.S. competitor, strong in PLM with their Windchill product. PTC has strategically differentiated itself by connecting PLM to emerging tech, IoT with ThingWorx, augmented reality with Euphoria.
Focusing on that digital thread to service.
Exactly. Connecting design all the way through to operation and service in the field. Predictive maintenance, real-time insights. That's their angle.
Okay, so with all this competition, this complexity, why is the market growing so consistently? What underlying trends are driving companies everywhere to invest more and more in these solutions?
It really all comes down to the ongoing digital transformation of, well, everything. It's not just a buzzword, it's an economic imperative. First, you have smart manufacturing and Industry 4.0.
The connected factory.
Right, convergence of physical and digital on the factory floor across supply chains. IoT, robotics, AI, advanced automation, all generating immense data, immense complexity. You need advanced software just to manage it, let alone optimize it. Second, the concepts of digital twin and digital thread are absolutely front and center, driving huge investment. A digital twin is that virtual, dynamic, updated representation of a physical product, asset, even a whole system.
Like a virtual copy that mirrors the real thing.
That's exactly. It allows you to simulate, analyze, predict behavior in real time without touching the physical object. The digital thread then connects all the data across the product's entire lifecycle design, manufacturing, maintenance, disposal. PLM software, like Dassault's, is foundational for creating and using these, unlocking huge insights. Next, the massive trend of cloud adoption. Moving to cloud-based software as a service, SaaS, it's dominant everywhere in enterprise software. Cloud offers scalability, lower upfront costs.
Shifts CapEx to OpEx.
Right. Better accessibility for remote teams, global teams. Easier collaboration across supply chains. The cloud deployments are consistently the fastest growing segment here, clear benefits. And finally, sustainability and ESG mandates, playing an increasingly huge role. Companies are under pressure, regulators, investors, consumers, to design and make more sustainable products.
Greener products, less waste.
Exactly. Drives significant demand for simulation, life cycle assessment tools, helps engineers optimize for energy efficiency, reduce material waste, ensure ethical sourcing, minimize carbon footprints. Critical for meeting those ESG standards.
We talked about high switching costs as a big part of the moat, but there's a less obvious, maybe even more powerful aspect, isn't there? Something that really locks customers in beyond just retraining staff.
Absolutely. And this is critical, often underappreciated. Control over proprietary data formats. Products designed in, say, CATIA, they aren't easily or perfectly transferable to a competitor system, not without significant risk.
Risk of data loss.
Corruption. Exactly. It's not a minor inconvenience, it's fundamental. Tiny inaccuracies in translation could lead to massive failures in the physical product.
So for a company like Boeing, using CATIA for generations of aircraft, their entire digital library, decades of incredibly complex engineering work, their most valuable IP, it's inextricably linked to Dassault's platform. That sounds almost unbreakable.
Precisely. It's often called data gravity. Creates this incredibly powerful incentive to stay within the Dassault ecosystem. It's not just about software features. It's about protecting their core IP. Decades of work, billions in R&D, the blueprints of their future. The 3D Experience platform becomes more than a tool. It's the secure, long-term custodian of a company's most vital assets, making switching a near insurmountable challenge. That's arguably their deepest, most durable moat.
Okay, looking ahead now, what are Dassault Systèmes' main growth engines? The move to the cloud seems foundational, right? Underpinning a lot else.
Indeed. The transition to cloud delivery is probably their most fundamental growth vector right now. Their 3D Experience platform on the cloud is key. It aims for two main goals. First, boost adoption among existing customers, offer more flexibility, scalability, collaboration, make it easier for them to use more Dassault tools.
Expand within the base.
Right. Second, and crucially, attract new customers, especially in that huge SMB market. Those businesses might not have the upfront cash or the big IT teams for traditional on-premise installations.
So it's not just moving software to a different server. It's really about expanding their reach, making these super powerful industrial-grade tools more accessible to a much broader market, kind of democratizing advanced innovation.
Exactly. The opportunity is substantial. Surveys show, 89% of business leaders see digital transformation as strategic. 90% of best-in-class orgs already use cloud platforms. So watching their cloud revenue growth, that's going to be a critical indicator of success here. It's a fundamental shift.
Beyond the cloud, they're also looking to diversify, moving beyond their traditional manufacturing base into completely new industries. That seems like a really bold move into uncharted territory.
It absolutely is. And life sciences and healthcare, that's definitely their most significant, most ambitious diversification effort. The vision here is, well, it's breathtaking. Apply their core skills, modeling, simulation, virtual twins to create a virtual twin of the human body.
Wow, the whole human body.
Imagine the implications. Using accurate digital models of organs, systems, maybe even entire individuals, to speed up drug discovery, test therapies virtually, optimize clinical trials with more precision, identify ideal patients, predict outcomes better, ultimately, enable truly personalized medicine, tailoring treatments based on an individual's unique biology, their virtual twin.
And metadata gave them the entry into clinical trials. BioVia handles the research side, creates that powerful end-to-end digital solution for drug development.
That's right, connects the dots.
Yeah.
But, and this is important, while the long-term potential is immense, transformative, the segment's recent financial performance has been, well, relatively flat. It shows that penetrating this incredibly complex regulated sector is gradual, challenging. They have seen a gradual recovery. Metadata revenue returned to 1% growth in Q4 2024, but it's still very early days. Needs sustained investment, patience.
They're also targeting massive projects in infrastructure in cities, energy, architecture, engineering, construction, public services. Sounds like another huge undertaking. Applying that virtual twin idea on an even grander scale.
It is indeed. This market has incredibly long sales cycles, complex procurement, but it's a substantial long-term opportunity. Digitalizing the design, construction, operation of global infrastructure. Think about a digital twin for a whole city.
Optimizing traffic flow, energy grids.
Exactly. Simulating climate change impacts, predicting maintenance for utilities, transport, buildings. Or imagine a major energy plant, a new smart port. having a complete digital twin, run simulations for safety, efficiency, maintenance before pouring any concrete, applying the virtual twin concept to entire systems, environments, making them smarter, more sustainable.
Okay, this next initiative, this is where Dassault seems to be really trying to define the future. Early 2025, they unveiled this new strategic vision, 3D UNAV plus RSES. And crucially, embedding generative AI right at the core sounds truly transformative.
It definitely is. This is positioned as the driver of their next major growth cycle, aiming to create these virtual plus real environments. Bridging the digital and physical worlds dynamically, intelligently, they're developing generative design capabilities, using AI to automatically generate optimized 3D models based on complex constraints.
Like weight, strength, cost.
Right, or material properties. This could dramatically accelerate product development, compressing design cycles from months, maybe years, down to days or hours.
So not just automating old tasks, but changing the creative process itself, which raises a big question. AI is everywhere now. How do they make this AI strategy defensible? What's their edge?
Excellent question. Critical,
Right.
because generic AI tools are becoming commoditized. Their strategy is coherent and highly defensible. Why? They're leveraging their most unique, irreplaceable asset, that vast proprietary repository of 3D models and simulation data accumulated over 4 decades.
All that historical engineering data.
Exactly. This incredibly rich, specialized data set, complex physics, engineering principles, material science, gives them an unparalleled advantage for training industry-specific, scientific, trustable AI models.
Yeah.
This is fundamentally different from generic large language models trained on, general web text. Dulce AI understands the precise language of geometry, physics, engineering.
So it's about creating specialized AI that deeply gets complex physics engineering.
Yeah.
Transforming the 3D Experience platform into an intelligent innovation assistant, something that actively collaborates with engineers.
Exactly. Imagine an engineer working on, say, a new jet engine bracket. Instead of manually tweaking parameters, running simulations for weeks, they could just state the goal. Optimize this for 15% less weight, maintain integrity under extreme heat, vibration, using this new alloy.
And the AI generates options.
Instantly generates optimal designs, presents trade-offs, simulates performance. This could create a powerful new moat, moving beyond just software tools to augmenting human ingenuity, transforming innovation. And their partnership with French AI leader Mistral AI, key part of executing this. Bringing in top-tier AI expertise to work with their proprietary data.
Acquisitions have clearly been a big part of their story. Metadata-centric software. Will this continue to be a major part of their growth strategy?
Yes, M&A remains integral. They have a long track record, about 90 acquisitions since founding. It's not just buying companies for size. It's strategic, acquiring key technologies, specialized domain expertise, market access to accelerate expansion into areas aligned with their vision.
So not growth for growth's sake. Strategic growth aligned with the mission, like metadata.
Precisely. Metadata in 2019 for $5.8 billion. Transformative. Established a huge foothold in life sciences clinical trials. Centric Software in 2018 gave them that tailored PLM for consumer goods, fashion. More recently, acquiring Content Serve in 2025 for product content management. Another target example. Fills a specific need in their platform vision. Enhancing product data management. Management is clear. Targeted M&A remains key to hitting those long-term growth and EPS targets.
All right, let's pivot to the numbers, because beneath all this tech ambition, this vision, there's a really robust financial profile. A hallmark of Dassault Systems is its high and stable profitability. What does that actually look like?
It's definitely characteristic of a top-tier software company. They consistently maintain non-IFRS operating margins above 30%. Remember, non-IFRS adjusts for certain non-cash items, one-offs, gives a clearer view of core business profitability.
So consistently over 30%.
Reached 31.9% in FY24. Guidance is to expand that further, targeting 32.2% to 32.4% in FY25. And what's really exceptional, their gross margins, consistently exceeding 80%.
80%, wow.
Reflects the very low marginal cost of selling more software once it's developed. Highlights the incredible value of their IP.
That's incredibly impressive, those gross margins. But I noticed that slight adjustment in margin guidance for FY25, down slightly from 70-100 basis points expansion to 50-70. What's that signal? Anything to worry about?
Actually, no. It was a strategic, intentional decision by management, not weakness. They specifically said it was to gain flexibility for more investment in their next-generation Gen 7 platform.
The platform underpinning the AI and 3D UNAV plus RSES stuff.
Exactly. It's a classic invest for growth strategy. a short-term, deliberate choice to temper immediate margin expansion to fuel the significant R&D, talent, go-to-market needed for that ambitious long-term growth. Connects the financial planning directly to the tech vision, prioritizing future leadership.
Okay, looking at revenue. Past 5 years, FY20 to FY24. Total revenue grew from $4.45 billion to $6.21 billion. That's an 8.7% compound annual growth rate. Pretty solid for their scale.
It absolutely is. And well-diversified geographically, which adds stability. 39% Americas, 38% Europe, 22% Asia in FY24. Global footprint mitigates regional dips. And the company is just a prolific generator of cash flow.
Really? How much?
Cash flow from operations was $1.15 billion in just the first half of 2025. Free cash flow was around $1.46 billion. That's $1.59 billion in FY24.
That strong, consistent cash flow gives them huge financial flexibility, right? For acquisitions, paying down debt, shareholder returns, all without constantly needing to tap expensive external capital markets.
Exactly. A very powerful, enviable position. They also maintain a really strong balance sheet. As of June 30th, 2025, net financial position was $1.51 billion, meaning way more cash than debt.
That's healthy.
Very. Recognized by credit agencies. S&P Global gives them an A rating, stable outlook, low financial risk.
And what about returning value to shareholders? Dividends, buybacks?
They do have a consistent history of paying dividends, usually declared annually in May. They keep a moderate payout ratio. It's a balanced approach. Rewards shareholders, but crucially, lets them reinvest a lot back into the business, funding organic growth like R&D, funding those strategic acquisitions. They also use share buybacks, mostly to offset dilution from employee stock plans. Helps maintain per-share value.
Now, at their Capital Markets Day, June 2025, management set a very ambitious goal. Double the company's non-IFRS diluted earnings per share, EPS, by the year 2029. That is a huge target for a company this size. What does that entail? What kind of growth does it imply?
That is indeed their primary financial compass now, guides everything. Achieving it requires, well, several things firing on all cylinders. Accelerating top-line revenue growth beyond historical rates, successfully scaling and monetizing the new 3D Unit AV plus RSCS platform and cloud offerings, and continuing disciplined capital allocation, including smart M&A.
So what does doubling EPS in about 5 years mean in terms of growth rate?
It implies a CAGR of roughly 15%, which is, frankly, a very high bar for a company of Dassault's size maturity. It signals immense confidence from management, but it also sets a very high expectation for future performance, future execution. It's the critical metric to watch.
So yeah, not just a fascinating tech story, it's also a profound financial growth story with clear, ambitious targets. Okay, no investment is risk-free. Even a company with a moat like Dassault's has potential pitfalls. What are the key risks listeners should consider here?
We can break them down. First, business and competitive risks. That intense competition from Siemens Autodesk. It's constant, fierce. Both are well-funded, sophisticated, aggressive, chasing similar opportunities, especially cloud and AI. And there's always the risk of technology disruption.
From AI, cloud.
Right. While Dassault is embracing them, a truly groundbreaking innovation from a new, agile competitor or a rival making a leapfrog move could challenge their position. Then, significant execution risks. That critical cloud transition. Imperative, yes, but carries risks if managed poorly. Customer disruption, data migration issues, failing to get the expected benefits. Also, that ambitious expansion into new markets, life sciences, infrastructure, and cities, inherently challenging. Long sales cycles, complex procurement, need specialized expertise they're still building. That relatively flat performance in life sciences recently highlights how tough penetration can be.
M&A risk, too.
Absolutely. M&A integration, especially big ones like metadata, always carries risks. Culture clashes, tech integration difficulties, failing to realize synergies can be a drag on performance. Next, cyclical and macroeconomic exposure. A big chunk of revenue still comes from cyclical industries, automotive, aerospace, industrial equipment. A global downturn, a slowdown in industrial spending, it hits their customers' R&D budgets, software spending.
You saw that recently.
Yeah, they cited continued scrutiny and contraction of the automotive market in Europe and the U.S. for lowering guidance in Q3 2024. Shows that sensitivity. And being global. Currency exposure. Exchange rate swings impact reported results. Finally, operational and security risks cannot be overstated. They're custodians of incredibly sensitive IP, their customers' most valuable designs. Cybersecurity is paramount. A major breach, severe reputational damage, loss of trust, huge financial liabilities, plus ongoing regulatory geopolitical risks in global operations, market access issues, compliance costs.
Dassault has historically traded at a premium valuation. What does that tell us? And how does it stack up against peers now?
Historically, yeah, its EBITDA averaged around 39.7x from FY20 to FY24. Peaked way up at 57.7x in 2021. Contracted back to a still robust 28.7x in FY24. Its latest PE ratio, around 31.8x. That's lower than pure-play software peers like Autodesk, around 60.8x, or PTC, around 50.2x. But still a significant premium compared to Siemens AG, the broader conglomerate, which is around 19.3x.
So lower than some pure software peers, but way higher than an industrial giant. Interesting spot.
Exactly. That premium is generally seen as justified, defensible moat, predictable recurring revenue. However, and this is key, current multiples leave little room for error in execution.
Markets pricing in success.
Pretty much. Pricing in continued strong performance, successful execution of all those strategic initiatives, cloud, new verticals, AI, any significant missteps, unexpected challenges, could see those multiples contract.
So as we wrap up, what's the ultimate takeaway? The core debate. What's the bull case, the optimistic view, and the bear case, the more cautious take?
Okay, let's break it down. The bull case. Dassault is uniquely, powerfully positioned for the next wave of industrial digitalization. Continued 3D experience adoption, especially on the cloud, drives sustained revenue growth, margin expansion, those big opportunities in life sciences, infrastructure, and cities. Vast, still largely untapped long-term growth engines. And the 3D UniV plus RSES vision with generative AI. Visionary. Could unlock a whole new S-curve of growth, helping them hit, maybe beat, that ambitious goal of doubling EPS by 2029. It's basically an investment in the future of how everything gets made. Now, the bear case. Concerns center on three things: valuation, cyclicality, execution risk. Skeptics say the premium valuation already assumes near-perfect execution. Little margin for safety if things go wrong. They highlight the exposure to cyclical downturns in core manufacturing, which could pressure growth like we saw with auto. And finally, bears point to significant execution risks, expanding into complex life sciences. Look at recent muted performance. The high uncertainty around commercializing that ambitious, maybe still abstract 3D UniV plus RSES vision and its AI. Can the bold vision translate into concrete, profitable results soon enough? That's the question.
Any final thoughts on the leadership team? Seems like continuity is important there.
Leadership quality is absolutely critical here. Bernard Charles, CEO from 95 to end of 23, widely seen as the chief architect of the modern strategy, the 3D experience vision. His move to executive chairman ensures continuity, keeps his deep knowledge involved. Pascal Dalloz, the new CEO since 2024, is a company veteran. Joined in 2001, held senior strategy, operational roles. His background positions him well to execute on that AI-driven, generative economy vision. Their consistent guidance, track record, that builds credibility.
And the Dassault family's significant ownership stake, how does that play in?
That concentrated ownership provides stability and, crucially, a truly long-term investment horizon. It can insulate management from short-term market pressures, activist demands, lets them focus on these multi-decade initiatives, virtual twin of the body, digital cities. But it also means voting control is concentrated, less influence for minority shareholders on governance. It's a double-edged sword. Defines a unique family influence structure for a public tech giant. #outright do it.
So what does this all mean for you, our listener? We've seen Dassault Systems is undeniably a best-in-class enterprise software company, possesses that wide, durable economic moat, high switching costs, proprietary data formats protecting customer IP. Financials are strong, predictable, recurring revenue, high profitability to robust cash flow, and its vision for the future, centered on the 3D experience platform, cloud, new verticals, generative AI through 3D UniV plus RSES. It's undeniably ambitious, transformative, forward-looking.
An investment in Dassault Systems, therefore, is fundamentally a long-term commitment to the ongoing digitalization of the physical world. Their solutions are the digital bedrock for modern products, complex aircraft, cars, medical devices, sustainable goods, all designed, simulated, manufactured using their tools. The key question for anyone considering this is really twofold. First, can management successfully execute this next-gen strategy, especially in those complex new markets and pioneering industrial AI? And second, are you comfortable with a premium valuation for an asset that, while top tier, faces identifiable headwinds and significant, albeit potentially hugely rewarding, execution risks?
As you look at the next generation of products coming down the pike, innovative medicines tailored to individuals, hyper-efficient sustainable cities, new energy solutions, ask yourself, How much of our physical world will truly become a virtual twin, built and optimized within systems like Dassault's,
No.
before it even exists in a reality, before a single physical prototype is made? And what is that profound level of digital control, that virtual first innovation? Well, what does that mean for our future, for humanity, our environment, and the products that define our daily lives?